Okay, great. Well, first of all, Nikhil, thank you for taking the time to join us. I think it's a great time to be talking about stablecoins. Obviously, would love to get an intro on your background and then kind of just dive into a couple of questions. These firesides are meant to be relatively open, just kind of following the flow of the conversation. Definitely more geared towards developers since we have a hackathon going. So we'll talk about maybe some of the ideas and areas that developers can really take advantage of or engage in today's market. But let's just start with some introductions. Obviously, I'm from the Harmony team, so I'll skip myself, but would love to just get your intro of how you got into crypto. What is the basic brief introduction on USDC and maybe the relationship with Circle, and then we'll go from there.
Yeah, awesome. Thanks for having me. So a little background on myself. How I got into crypto and how I started working into crypto are two different things. How I got into crypto was actually I was playing online poker professionally for a number of years. And then in the US, at least, online poker got shut down around 2011. And you weren't able to play anymore from the US. So you'd either have to go to another country or there started to emerge some Bitcoin poker sites. And so that was my first introduction into Bitcoin and crypto. I didn't really know any of the philosophy behind it at that time. It was just a way to play online poker. Looking back at it now, we were gambling fortunes without knowing it. But that was my first foray into Bitcoin and crypto. And it was a way for me to continue playing online poker in the States. Years later, got a job in finance, was working in finance, then came to tech. I worked at a developer platform for blockchain called Alchemy before coming to Circle, and actually talked to Circle at Alchemy, and then eventually landed at Circle.
Yeah, that's great. And then maybe tell us more about Circle. I think most people know USDC as the stablecoin of the product, but how does that work between the two?
Yeah, so Circle and Coinbase launched USDC together. And one of the key ideas, even in the launch, was that there needs to be a separate governing body for USDC, the stablecoin. And the thought there is for us to get widespread adoption of a stablecoin like USDC, it can't just always be Circle and Coinbase that are the key governing participants for the stablecoin. We need to be able to allow, global banks and global exchanges and any other participants, similar to what Swift did with the Swift network or Visa. These are really consortiums that were built through partnerships with many different banks globally, many different players globally, in order to get widespread adoption. And so there's the Center Consortium now, which has its own CEO. There's Coinbase, which is its own entity, and then there's Circle, which is its own entity. And for us at Circle, beyond just the launch of USDC, now we really focus on payments and treasury infrastructure that we've built on top of USDC.
Yeah, that's great. Maybe I know some of the folks in our hackathon are coming to are new, so maybe even give an explanation of USDC. I mean, I think, if there's any unique thing that you want to share about it beyond just like, hey, it's a peg stablecoin dollar for dollar, maybe give some insights on, what's unique from your perspective.
Yeah. So I mean, the definition of stablecoin, you nailed it. It's a cryptocurrency essentially that attempts to peg its value to some external reference, in this case, a dollar. And you can imagine, in the future, we'll launch other stablecoins that are pegged to other currencies. So, euros, yen, etc. But the way I would think about it is, if you want to get widespread adoption of the stablecoin, especially one pegged to a dollar, there needs to be some kind of interoperability between the traditional financial system where most dollars sit today in bank accounts, and this new blockchain payment rail that we have, a mixture of a lot of different layer ones. And so the role Circle is playing is really the interoperability between those two worlds. We're a money services business. We have money transmission licenses in all the states in the US that offer them. We have e-money licenses. And so we're really playing that bridging role between the regulated financial sector and the crypto ecosystem. And so I think that's one of the key things that we provide. Obviously, there's the smart contract itself, which is open source for USDC. We're on multiple different blockchains and plan to be on more. But beyond that, I think there's a few key design choices, right? So Diem, we mentioned consortiums early on. Diem had and has a really impressive consortium, but if you control the underlying technology for the stablecoin as well, it's very hard for somebody outside of that consortium, same thing with CBDCs, to trust it, because now you have the ability to censor transactions. And if we're moving into a world where all money is digital, being able to censor somebody's money is like being able to control their whole life. And so for us, it was very important for us to not control any of the networks that USDC is on, but instead put it on, open, permissionless, public blockchains.
Yeah, I like how you clearly there's a clear separation of the product and the team that is driving the adoption. Right?
Yep. And you need both, right? This is part of what this hackathon is for, right? It's the tech for Harmony could be the greatest tech, right, but you still need people to be building interesting things on top of that tech for the real value to accrue.
Yeah, for sure. So I think most people who've been watching have seen the hyper growth of USDC. What do you think is, maybe where did USDC come from? What were the initial, who are the initial adopters, and where do you see it now? And then in maybe 1 or 2 years, the kind of the trajectory?
Yeah, I think still even now, USDC is riding the growth of crypto generally. So on one side, there's exchanges, and the ability to use USDC for trading. It's a common quote currency. So, any other cryptocurrency that you're buying, it's usually quoted against a USDC. And so there's the trading use case. But then there's this explosion that's happening in DeFi, as well as NFT marketplaces and dApps. And I think it's been the combination of all of that has really helped USDC grow. There's things that are happening outside of the crypto ecosystem, but those things are still very early. And so where I see the trajectory, even we're at something like 28 billion USDC in circulation right now. If you look at the amount of electronic US dollar money sitting in bank accounts, it's over 100 trillion. So there's still a long way to go. There's 100x, 1000x potential here still. For widespread adoption of stablecoins. And, the bet here that we're making is, that money sitting in bank accounts is electronic dollars. Right. It's not like physical dollars are sitting there and passing between different banks. And so our hypothesis here is that putting these dollars onto blockchains, public blockchains that are open source, open internet protocols similar to HTTP or TCP/IP is actually the wave of the future. And so the potential is that full M2 becoming something that sits on blockchain payment rails. Yeah.
And I guess there's lots of things we could dive into that, but where do you see maybe friction or I think in the crypto world, right, the native crypto folks know about USDC and yep, how to use it. Is it really what's preventing it from being more prevalent in kind of the connecting to the fiat world?
In the long run, my take is that we're going to bring the traditional world into crypto. Right. But I think we're still in the early adopter phase. It feels like there's been so much growth, but we're still so early in all of this, right? So we look at the number of users in crypto right now, it's still really early. But for those users that have come on early and tried using DeFi and tried sending money on blockchain payment rails, it's a clear difference. If you've ever done a wire, even domestically, versus just sending somebody, any cryptocurrency really on blockchain payment rails, there's just a world of difference. Like we talk about like being frustrated that, let's say Bitcoin takes a couple hours to settle. Like a wire there's no transparency on what the status of the wire is. It's more expensive and it takes even longer, even domestically, and international is even worse. Whereas here, we can send money to anybody in the world near instant, near free, and more securely. So why wouldn't this become, like, the early adopters understand that this is the clear benefits here, but we still haven't crossed the chasm into, mainstream institutions taking payments in stable coins, mainstream institutions doing their business in stable coins. We're starting to get like the Visas and the MasterCards out there, and Visa settling within their network in USDC. But to me, we're still in the very early innings of this.
And is it, do you see more like existing institutions moving over, or are you seeing, do you think that it'll be a completely new set of players and partners and integrators coming into the space? Like,
I think we'll see both. To me, the more exciting part is what you just said. Like we're already starting to see totally new business models that are emerging that didn't exist previously. But we're also going to see the traditional players. We already heard about Shopify now trying to launch NFT marketplaces. We're going to see more traditional players coming into the space, as well as just net new business models that are created because of this underlying technology.
And as so let's say you're a developer today coming into the space, or you're an entrepreneur and you want to do something in stablecoins. Like, what should they know? What are the interesting pain points or opportunities?
To me, the difficulty for now is that you still need to go at some point, and this is also what we were talking about, of bringing traditional institutions in. Traditional institutions, I think, will come in. There'll be different flavors. NFTs have started to get mainstream adoption. DeFi will start to get mainstream adoption. But the first struggle, let's say, with DeFi will be, and same thing with NFTs, I don't know anything about crypto. I'm interested in trying this out. How do I get going? And right now, the user experience is, whether you're an institution or an individual, set up an account with an exchange, figure out how that works, connect your bank account, send some money in, try to feel comfortable with that. Maybe you have to take that money and then send it to a non-custodial wallet that can connect with the dApp. Like, it's a lot of steps. And so I think the role that Circle is really playing is bridging that gap, right? So by being able to process payments that land as USDC, now an NFT marketplace like NBA Top Shots can just enable the traditional payment methods that people are used to on any other e-commerce site. And behind the scenes, it's landing as USDC that can now move nimbly. And so to me, there's still very basic use cases. Stablecoins, to me, like Bitcoin is more of a reserve currency, and stablecoins are for payments. And you put them on top of L1s, and you're able to now send US dollars much cheaper, much faster, and securely. And so to me, the use cases are anything you can do with a dollar. And the longer it stays in the form of a stable coin, the more you get the benefits. And then when you need to transfer it back out into the traditional system, somebody like a Circle can enable that, but there's not as much magic there. You still need to go, wire from one bank account to another at the end of the day to go and back into the traditional infrastructure. But the longer you can keep it on these blockchain payment rails, the more the magic is clear, because now all these transactions are happening near instant, near free, and you're seeing the difference.
Do you see there's I think that's always the question of like, when it touches the fiat gateway or the fiat world, like things tend to just, you lose the magic.
Yep.
So how do you make, as like, is it just like getting more merchants to accept it, like, so that you have this like almost like layer above the fiat world where you can transact and settle and like do 90% of the things without ever, I mean, at some point, what if I need to buy groceries? Like, okay, well, the grocery store has to take USDC. Otherwise I'm just kind of out of luck. Right.
Yep. Yeah, exactly. And I love that we're obviously in the crypto world. Again, we're super excited about all the things that you can do and DeFi and NFTs and what's happening. But it hasn't really crossed over to the mainstream world yet, other than some of them coming in now. For the other way around, like you said, there's just basic things that we don't even have for some of these use cases. So a simple example is the retail use case. Let's say we wanted to have a pay with USDC option or pay with stablecoin option in more places. Obviously, for merchants, I think it's a little bit more comfortable for them to not have a volatile asset that's pegged to something that they're used to. They're used to receiving dollars. This is just another form factor for those dollars. So it sounds simple enough, but it's not as easy as just, hey, retailer, enable pay with USDC and just have a wallet address. How do you know who sent to that wallet address? How do you attribute identity to the wallet or the sender to buy that good or service? How do you pass metadata between a wallet and the retailer? Like a lot of these very basic things just aren't there right now. So yeah, I mean, I think there's a lot of low-hanging fruit still that hasn't really fully been tackled.
How would you advise like a developer or entrepreneur to even think about, like, what's the best next step for them to think about the problems in this space and pain points?
So I would think about what made Web 2 so successful and SaaS in general grow so fast. Yeah. To me is user experience. It's, and Uber at the end of the day is like it's like a hitchhiking app or a taxi app. Yeah. Taxis existed before this. It's not like they created a whole new business that never existed. They just made the user experience so good, and obviously costs matter as well, and logistics and having enough drivers. But at the end of the day, it's the user experience that helped it get such widespread adoption. And with Web 3, because we haven't had as much time as Web 2 to build all the abstractions to make the same, equivalent user experiences, we're still a little bit behind on the user experience front. But once we close that gap, I think all the other benefits, especially like transparency that exists in Web 3, will obviously trump Web 2. If it's basically the same application, but you get all the benefits of the transparency that exists in Web 3 that don't exist in Web 2, obviously you're going to use the Web 3 version. It's just us building all those building blocks and abstractions to getting the equivalent user experience.
Yeah. I think that's a really good point. And I think one other question I just thought of is, in Web 2, there's so many companies building, right? There's so many, every 6 months, there's a new generation of the same, concept. And
yep.
Why do you think maybe Web 3 doesn't have as many people coming in? I mean, it's early, right? Like, how do we get more developers or more founders, entrepreneurs coming into Web 3 even faster than what we currently have?
I think we're starting to get it with the gaming applications and the NFTs. That's starting to bring in more mainstream users. I think DeFi was a little too esoteric, but it's going to be the core building blocks that will make things like NFTs more interesting, because now you can use NFTs as collateral potentially in a DeFi application. So again, we're still kind of building these core primitives and building blocks. And so I think it's hard to get a bunch of people to come in when you're just showing them building blocks, like the early building blocks. I don't think it's as easy to conceptualize. But as you start to get more of these mainstream applications, like gaming applications, people know how gaming works. And now you've just added, like with Axie, a play to earn type of feature. And now you can take that core kind of idea and take it into a bunch of different other gaming ideas. And so to me, it's showing the potential and some of the unique things that you can do with Web3 and this transparency. And then figuring out how to apply those things into new business models. I think there's probably room for both. But to me, the thing that will get people excited is when they realize that it's not just us rebuilding what already existed in Web 2. it's the unique features that exist in Web3 where everybody's almost sharing a backend. Everyone who's building on Harmony is almost sharing a backend together and can all build on top of each other. I think once that clicks, then developers start to get excited and realize that, my small team can actually have a lot of impact. My 2-3 person team can actually build something foundational on an L1 that other people will build on top of and add even more value to.
Yeah. No, that's really cool. I think we can cut that part and just make that our promo for getting more people excited to build in Web3.
I mean, I saw this. Excuse the alarm in the background, but I saw this at Alchemy too, where these small 2-3 person teams are just building something. You're not sure if it's going to go anywhere. They have very little funding. And then just in a short amount of time, because things move so quickly in crypto, suddenly there's 1 billion locked in their platform and everybody is using it. It happens very quickly in crypto. And so to me, that opportunity doesn't really exist as much in Web2. Web2 helped lower the barriers where, now any developer can start building. But so many of the big ideas have already been taken in Web2 that it's hard to find a really exciting new idea that hasn't been taken. It's more like, if I was to build something in Web2, I'd focus on something niche that isn't fully served right now and hope that it'll grow into something bigger. Whereas with Web3, there's an opportunity for a small 2-3 person team to build something foundational just with the 3-person team and then grow it.
Yeah. That's awesome. Any, if like open canvas, any ideas that you would suggest to around stable coins or payments because right now we are hosting a hackathon and like there are a lot of developers. Some of them have, there's team formation. Some of them are just thinking about ideas, but I think actually giving them the right path to chase down is actually very valuable, right?
Yeah. So I think, again, that retail use case is interesting to me. Being able to tie, we don't have really like MetaMask plus identity that you can now connect to a retailer.
Right.
And I think the difficult part here is that you have to build both sides of the network. You have to build the wallet side, and wallets enabling identity and other features to be included into the wallet. And then you need to also get PSPs and retailers to adopt the same type of standard to be able to pass information between each other. But I think if somebody is able to solve that and build that network, that's a really powerful thing that can help take stable coins and crypto payments in general to another level. I think there's just basic things like a plaid for exchanges. There aren't. I don't know if there are any stable coins that are backed by Bitcoin. There's DAI that's backed by ETH, but if Bitcoin is the reserve currency of crypto, which I look at it as, then it would make all the sense in the world to have a Bitcoin backed US dollar stablecoin. Dollars are used for payments. Bitcoin is used for reserve. So I think there's a lot of, again, I don't know, there's probably teams already working on this, but I just don't know about them. But I think there's just a lot of low-hanging fruit ideas out there. And I think the important thing for a lot of developers to know is that, especially in stablecoins, there's going to be some challenges around bridging the traditional world with the crypto world. But if you can solve this, there's a gigantic market, and even again, a small team can build something really impactful if they do it in the right way. And there's going to be a lot of different approaches to a lot of these things, even stable coins. There's a lot of really interesting approaches to stable coins. And I think it's good in general for the ecosystem to have all those different things, because again, we're still very early and we don't know what's going to work. And, I can see a world where a lot of these different things work, but it'll work in different scenarios, right? So USDC can be used to bridge the traditional world and the crypto world, but there's also other use cases and other types of stable coins that I'm glad exist, because we get to see this experiment together and we get to all see kind of how this thing plays out.
Yeah, no, I think you mentioned a really good point. So maybe one thought after that is there's already been so many different attempts at stablecoins, whether they're pegged or algorithmic. Like, do you see space for even new stablecoin projects that can grow big?
For sure, for sure. I mean, I think we're still even early in the algorithmic stablecoin approaches. I think Frax is really interesting. You've got Terra. Like, there's a lot of interesting projects out there. I have trouble keeping up just with stablecoin projects alone. And there's so much happening in this space. So yeah, I mean, I think there's a lot of room. There's been high profile things going wrong with algorithmic stablecoins, but that to me just says there's still opportunity. There's still room to figure out what the right approach is, and we haven't quite nailed it in certain types of designs for algorithmic stablecoins.
Yeah. Okay, cool. Is there any other thought or topic that you'd like to just cover? What else is interesting or exciting? Kind of that you see in your line of path?
I mean, to me, what's exciting again is we have this opportunity, especially with stablecoins. Stablecoins to me is like it's almost a use case. It's the mainstream use case that anybody can understand. Like, I transact with dollars. Dollars is the dominant settlement currency in the world and actual reserve currency. Now it's just on a new payment rail is a way to think of dollars on blockchains. And it's a payment rail, again, that's cheaper, faster, more secure. Who wouldn't want that? And so to me, stablecoins, if you're building a stablecoin application on Harmony, think about all the things that you'd want to do with a dollar. Like, basically every app that you have these days has a balance on. That can be replaced with a stablecoin and then have some of the crypto specific benefits. There's much higher yields in crypto than there are dollars sitting in your bank account. There should be payroll apps where you can get paid out in stablecoins. We want to see aid apps where, even COVID recently kind of exposed, hey, there's not a clean way for me to just see a whole host of wallets that I should be sending aid to. There's not a really easy way to do that. With crypto, you could actually build, if you combine the identity features in some way with a wallet, you have the ability to now like choose a segment and offer them aid that they might need. So yeah, I mean, to me, it's wide open still in terms of the things you can build with stablecoins. And I would just think of it as any use case that you have with a dollar should now move on to a stablecoin use case where it's just a more efficient dollar.
Yeah, that's great. I think, yeah, as you mentioned, even though like we in the crypto native world see like everything growing, USDC growing exponentially, it's still not even 1% of the number that you just cited earlier.
Yep.
Yeah.
I mean, anybody building today, and this is why there is an opportunity. I don't think it will always be like this, but because we're still so early, a one-man team. I mean, Yearn started as just Andre, right? Yeah. A one-man team can have a big impact. And I think for anybody who's building today, that should be super exciting, is that there's still so much to be done and we're still so early in this. There's 100x, 1000x potential before, and maybe stablecoins are a good barometer, right? Because it's easier to understand, okay, these are dollars sitting in bank accounts that are electronic dollars versus truly digital dollars that are sitting on public blockchains. And we're at 28 billion and we're very excited, obviously, with that growth, but there's over 100 trillion sitting in M2. So, again, it's 100x, 1000x from here. We just have to build out that infrastructure.
Yeah. Okay, cool. So, this has been a great discussion. We can give you any other last words for developers or just in general. But yeah, definitely want to thank you for kind of diving in deeper. But yeah, let's, if you have anything else you're thinking of, happy to go down that route. Yeah.
No, this was great. I appreciate you having me, Lee. And I am excited to see what the developers in this hackathon build.
Yeah, we are as well. We just got started, so this is actually week one, and there's been a lot of team formation. Some projects submitted already, so that's kind of interesting. But we're looking through all the developer profiles, and yeah, we should see some really good ones.